doing on today? This message is for real estate agents and anyone within the real estate industry. I am sure you are aware that negative credit is a major problem that plagues millions of people in the country today. Without a doubt, it is the number one issue that prevents the overwhelming majority of your clients from realizing the American dream of home ownership. We know that in the real estate and mortgage business, you may have to connect with dozens of prospects in order to find 5 to 10 people whose credit is good enough to even qualify for a home loan. That low percentage has been an accepted part of the business for years, but we're going to change that today. My name is Danikia Taylor. I'm a regional vice president with Financial Education Services, and I partner with real estate agents and individuals in the real estate industry nationwide. Today we're going to be hosting what I call a lunch and learn. So go ahead, grab your lunch, and let's get ready to learn. We're going to talk about how you're going to be able to leverage the credit industry to create more real estate transactions for yourself. Because it's a proven fact that 46% of real estate transaction problems are triggered by some type of financing issue, whether it be the individual not having the appropriate credit score to get approved or them not even having enough money at the time of closing. 56% of all consumers have a subprime credit score. That is very, very eye-opening. I know here in Georgia, they just released a real estate program a couple of months ago, lease to purchase program. A ton of real estate agents were super excited about the program because now they were going to be able to get individuals into homes with a 580 credit score. Now you may say, what? Because that definitely was my reaction. I actually pulled back some of those real estate agents and helped them to better understand the clearer picture. I had to say, hey, do you realize the reason why this program was even created? Because people can't get qualified for homes. So they had to find a new way to help people to achieve the dream of owning a home, but now with a 580 credit score. And think about it, the lower the score, the less house that a person can actually qualify for. And the whole idea is for you to generate as much income as possible. So we want to get that score as high as possible, so that's a bigger commission check for you. And so today we're going to teach you some solutions to deal with this dilemma. Now, we got to first start by addressing the personal and financial affairs of America right now. We often only think of ourselves or our client when we think of credit challenges, but you have to realize that 43 million people have a 599 credit score or lower. Nearly half of Americans don't even know their credit score. I speak with realtors on a regular basis who say, I have people calling me all the time saying they want to purchase a home. I ask them what their credit score is, and 9 times out of 10, they do not know where they stand credit-wise. The average debt is over $225,000, with many people having less than $500 in savings. That should definitely be the other way around. And if you're in the real estate industry and if you've been in it for quite some time, you may even have heard your lender say, hey, we can't get this person approved right now because their debt to income ratio is too high. So we got to work on those things. We want to make sure that you first understand how credit is calculated so that you can better communicate it with your client as well. You should know that 35% of an individual's credit score is their payment history. So it does matter if an individual is making their payments on time. One late payment can cost an individual anywhere from 20 to 30 points. Another 30% is the amount that the individual owes. Again, that ties back into the realm of when the mortgage lender is looking at the individual's credit and they see the debt to income ratio being off. That's what they're seeing. 15% is the length of credit history. So if you have clients looking to purchase homes, you want to let them know don't close any accounts, right? Don't open or close any accounts. Now, most importantly, when they close those accounts, they're cutting off their length of credit history, which impacts their score by 15%. Another 10% is mix of credit, so has to have a good mixture of revolving and installment accounts. And then also another 10% is new credit. And so that is those inquiries. I've heard some very horrific stories when dealing with real estate agents, and they say, I told them not to apply for anything, and right before closing, the person went and purchased a car. Not cool, right? You probably like, yeah, I've been in that situation. Well, let's talk about credit though, because credit is infused in our life whether we want it to be or not. And today, an individual's credit score is like a vital sign, is being monitored at all times. It can impact the insurance premiums as well as interest rates. Individuals can be denied the ability to rent, purchase, get a credit card, and even employment. And over the course of your lifetime, less than excellent credit could run an individual anywhere from $200,000 to $1 million. If you think about that, and additional interest and fees that are going to be charged, that is a lot of money over the course of your lifetime. Now let's talk about 5 common myths in regards to credit. Most of the things that we know about credit has been things that we've either heard or read about, or if you've ever attended a first-time home buyer seminar or hosted one, maybe you've heard some things from your lender in regards to credit. And so we want to talk about myth number 1. Do you think that credit agencies are empowered with some kind of governmental authority? Most people think that's true, but that's absolutely false. Credit agencies have no legal authority at all. They're simply private companies who are in the business of selling credit information. You should also know that they are not bureaus at all. They use that bureau term, right, to sound official or to sound like they're authority, but they're not bureaus. TransUnion is actually owned by Goldman Sachs. Goldman Sachs is a bank. So think about it. You have a bank who is the one that's going to approve you for lending to purchase your home or whatever it may be, but they also own the credit bureau, in which determines if you're going to be able to get qualified. You should also know that Experience is actually owned by a company out of Dublin, Ireland. So think about that. You have a completely different country telling you if you can qualify to do business or to purchase a home in your native country. That's very eye-opening. Myth number 2, credit agencies are required by law to keep derogatory items on your credit report for 7 to 10 years. Most people believe that to be true, but that's absolutely false as well. Credit agencies don't have to report anything on you at all. They're actually required by law to automatically remove derogatory items older than 7 years. In the case of a bankruptcy, 10 years. I can share with you that they do not always do that. Myth number 3, it's impossible to get a bankruptcy off. Guess what? That's absolutely false. Bankruptcies come off just like any other derogatory item that is incorrectly reported, obsolete, or erroneous, misleading, incomplete, or that cannot be verified in a timely manner. Remember, the nature of the item has nothing to do with this removal under the Fair Credit Reporting Act. Myth number 4, the information on your credit report cannot be changed. We know that's false, right? Under the Fair Credit Reporting Act, both federal and various state laws require that items be removed if they're not 100% accurate or cannot be verified in a timely manner. Myth number 5, it's illegal or immoral to have the information on your credit report altered or removed. Some people ask, is this legal? Can you really help me? Absolutely, we can help you. There's something that's called the Fair Credit Reporting Act. This has actually been around since 1971. It was actually enacted by Congress for the very purpose of protecting us as consumers from the intrusion of the credit agencies into our lives. And we've all been able to see over the last few weeks or here recently, the credit bureaus have their own issues, right? We saw that Equifax just had a major data breach, and that's something to be aware of. You should know that you can actually restore your score. The Fair Credit Reporting Act, as I mentioned, has been around since 1971. It gives Americans the right to dispute and or investigate any item on our credit report, whether it be inaccurate, erroneous, or obsolete. It does include things such as late payments, charge-offs, foreclosures, judgments, repossessions, bankruptcies, tax liens, collections, short sales, medical bills, and any other item that you can possibly think of can actually be removed by leveraging the Fair Credit Reporting Act. And let's talk about this though. Who likes to pay more or extra for the same exact thing? Reality is, this is what's happening every single day. If you look at this example, this is a car, same price, right? $18,000. But if you take someone who has poor credit compared to someone who has excellent credit, you immediately see the difference in the interest rate, the APR. Most importantly, you see the difference of the monthly payments. And I can definitely share that these interest rates are kind of conservative, because I've actually seen people with poor credit pay way more in interest in regards to purchasing cars or anything for that matter. And if you look at the total cost of the loan, someone with poor credit is going to end up paying almost $10,000 more than someone who has excellent credit. The credit game, or the credit is a game rather. If you know the rules to the game, you can then know how to play. It's not like anyone will be pulling the wool of your eyes. You'll be fully aware of what's going on. Credit is a game that you didn't know you were playing, but don't worry, because me, DanikiaTaylor.com, is here to help you. The credit score hits us in almost every area of our finances. So let's just look at these examples. You have a credit card, limit is $7,000. You have Henry with a credit score of 750, Dolores with a 630. You see the difference immediately in the interest rates, the monthly payment, but most of all, the overall penalty or overage in which that person is paying, which is over $41,000. If you look at insurance, looking at the credit scores, and a lot of people say, well, 630, I thought that's pretty good. Not really. The lower your score, the more you're paying for everything. You want to get your score as high as possible. So in that example, insurance, you see the major difference or the penalty that that individual is paying in regards to having less than perfect credit. When it comes to your mortgage payment, your mortgage is impacted in 3 different areas in regards to credit. So your credit can affect 3 different areas of your mortgage payment. You have what is called PMI, which is your mortgage insurance. This is a risk-based score. The lower your score, the client may be forced to pay PMI. There's something also called PITI, your principal and interest, tax, and insurance. The interest is based on your credit score. Then there's also the homeowner's insurance premium, which is also based on your credit score. So let's do the math. If you have someone purchasing a home with a mortgage of $325,000, you have Henry with a credit score of 750, Dolores at 630. You see the difference in the interest rates, the difference in the monthly payment, but look at the lifetime of the payment and what the difference is going to be. And if you can even think, this is actually be neighbors, right? This can be the 2 houses in the same neighborhood, but because one person has a higher score than the other, you could actually be paying more for your house and you stay next door to someone with the same exact floor plan as you. Looking at mortgage 2, same scenario. You have a mortgage of $475,000. The difference in credit score will of course impact the interest, the monthly payment, and the overall life of the loan. As a real estate agent, your client is depending on you to provide solutions to their home buying challenges. No worries. We can do this together, and let's talk about it. United Credit Education Services has almost a 15-year track record. We've already removed close to 1 million derogatory items from our clients' credit reports. We have tens of thousands of satisfied clients. We actually have an A-plus rating with the Better Business Bureau. We're also accredited with the Better Business Bureau. And the huge bonus for real estate agents, because most of the times when agents are sending over their clients to the lenders, if they don't qualify, they never hear back from that client or they lose that sale. You don't have to worry about that. Our program will actually allow for you to have a portal so that you can monitor your clients' results. So you don't have to worry about if you're referring them over to get their credit restored, that you will never hear back from them, because you'll have your own personal portal to keep up with their progress, and then you're able to follow up with them on the back end to get them into their home. When clients get started, this is what their portal will look like. They'll be able to see what their beginning credit score is, how their credit score is calculated. Most importantly, they will have an actual progress report. Well, they'll be able to see what negative items are on their report, the description, as well as the status of the item. If it's currently in dispute, it's going to say in dispute. If it has been deleted, it'll say deleted. You do not want to send your client over to the mortgage lender if the status is still in dispute, because the lender will see that. You want to wait until your client has went fully through the program, everything has been cleared up, and they're ready to get approved. At United Credit, let me also just mention, we've already developed a process by which we work with the consumers to research the outdated, inaccurate, and unverifiable information on their credit reports to improve their credit profile. This service could help some of your prospects and put your company on the road to incredible growth. Imagine being able to recover potentially lost revenue from your people you previously had to turn away. I'm sure you can see how this service could increase the number of transactions that you'll be able to close. More importantly, this service could enable your clients to qualify for lower interest mortgages, which is the ultimate goal, right? That will make higher loan amounts affordable and enable them to buy the home that they really want. Now, all that sounds great, right? But you want to hear some testimonies of some people that's went through the program. We have Yvette Reed. She's out of Cherry Hill, New Jersey. In just 2 months, her credit score increased to the point that her car insurance premium was lowered by $2,000 per year. Think about that. $2,000 per year. That's more money to put down on a new home, right? Johnny and Sandra Moeller, they're out of Dallas, Texas. After having a bankruptcy removed, they were able to purchase a home with a low fixed interest rate, saving them almost $1,000 per month. Think about that. That's $12,000 a year. The average home loan is 30 years. So do the math on that. That's $360,000 out the window had that couple not fixed their credit. When clients get started on our services, they will pay a one-time activation fee of $99 and then $89 per month. And you will feel at ease because you'll know that your client is working with a reputable company. They're getting the quality of services and they're going to be able to get qualified. Here at United Credit Education Services, we feel that by utilizing our service, your company will be able to give many people the opportunity that they were looking for. You can contact the people you've already have or have spoken with or have been unable to help due to credit problems and give them the chance to purchase a home or even reduce their debt by refinancing. Please give me a call as soon as possible if you need more details about our services and or products. I will gladly show you how we can help your clients achieve their full credit potential. Thank you for your consideration, and I look forward to speaking with you very, very soon. Be sure to check out the comment section of this video. At the bottom, I'm going to list all of my contact information, and I hope you have a beautiful, beautiful day. Take care.